Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so article came out recently. This was on a Forbes article. Housing market predictions for 2023. Are home prices finally becoming affordable? A bunch of data in the article we're going to go through here. What are the two things, Juana, when affordable? What are they usually talking about?
They're talking about monthly payments and income.
Okay. So income meaning
how much money people are earning and bringing home versus their expenses.
Okay. Incomes are going up.
Incomes are going up, and so is inflation. So inflation is the biggest thief there is because inflation has been outpacing incomes for a while, and that's a problem. And people have been getting raises, and that's great, but then that has spurred more inflation. So it's this vicious cycle.
Okay, what are the two things that affect the payment when people buy?
Okay, so if you have a mortgage, then the two things that affect your payment are obviously your interest rate.
Okay, your interest rate,
Okay.
which has gone down since November.
Right, it has
Because
gone down.
this is saying finally becoming affordable is referencing like 6 months ago when
Right.
interest rates were above 7.
Right, because your mortgage payment is made up of your principal payment, which is the amount of money that you're actually reducing the debt on the property. Your interest payment, which is the amount of money that you're paying to borrow the money to purchase the house, and then taxes and insurance. Now, taxes, I don't think any of us are familiar with taxes going down, so I don't think that's going to happen. And same thing with insurance. And particularly now, I don't know how many of us are really aware of that, but some of us have seen insurance premiums go up, and those of us that haven't, we're about to, because I've spoken with some insurance company owners, the people that own the little insurance company in the mall and that sort of thing, and they're talking about how their parent company, whether it's State Farm or Farmers or whomever, they're looking at substantial price increases. So that also impacts your payment because you have to pay that as part of your payment if you have a mortgage.
Okay, so it's interest pay. It's the two things are the interest and then what you buy the house for.
Right.
Those are the two things that ultimately determine
Right.
your affordability. Okay, so but home prices have dropped. They're still up. Well, it's arguable where you're talking. Let's talk about national. Okay, they're basically the same as they were last year. People go, oh, but they're the aggregate numbers, or someone will point out like a specific zip code and say, oh, it's 6% in that zip code. That's great, but effectively, from 6 months ago, home prices are the same or maybe down a little bit, but their interest rates are much lower.
Interest rates are much lower, and
Like a percentage lower.
right. And as far as prices, it's kind of interesting what you said about location, right? I'm tracking a particular zip code, and I got an email today about a property that's been on the market for a couple of weeks, and I was expecting a price decrease. Instead, they did a price increase.
Okay. All right. So I'm gonna read a thing from the article here, and then we'll talk about it. Could a housing recovery possibly be underway? In March, mortgage rates ended the month over 30 basis points lower. That's 0.3% or 0.3%. Okay, where they started, and more buyers returned to the market. Home sales fell, and actually in Vegas, it was 37% more. The sales were up 37% in
Okay.
March from February. 37% was reported in the Art Review Journal.
Right, but okay, so let's kind of visit that number for a moment.
Okay.
So how did we come up with that 37%? Well, it had to do with the number of transactions. It didn't have to do with that somehow there's a fire sale on homes, right? It just had to do with buyers coming back into the market because interest rates dropped, so more people went, oh, I'm going to go ahead and grab that house. Plus, sellers came back on the market because it's the selling season at springtime.
Right. Well, 37% more sales and home prices went up in March.
Right.
Okay. Home sales prices fell year over year in February. This is nationally, the first time in nearly 11 years. and total home sales saw their largest monthly increase since July 2020. However, many economists remain mixed about how much more home prices will drop this year. So the drop year over year was 0.2% nationally. The largest monthly percentage increase was month over month sale of homes. For one, the nation's housing supply remains limited. Those who purchased homes in recent years at record low interest rates are staying put, which we've talked about. Tight inventory issues in part are also keeping prices from dropping off, which is perpetuating affordability challenges for many, especially first-time homebuyers. Though home prices remain high year over year, they're not as eye-popping as they were in early 22. Even so, how much further home prices will dip in 2023 will likely depend on where mortgage rates go. There's two interesting things in here. They're still talking about this year-over-year phenomenon. So there's fascination with comparing last year to this year, which I disagree. Forget last year. Let's compare last month to this month. Home prices are going up. We do know that last month list prices were higher than 7 of the 12 months last year, right? And the interest rates are not affecting home prices the way we were told they would be affected. Those are some of the factors.
Right, and what this paragraph said was that it's the people who have purchased homes in the last few years and have these low interest rates that are staying put. And I respectfully disagree. I think it's also all the people who refinanced at those lower rates. So now all of a sudden you've got a much bigger block of property owners. So you have the people who purchased at low rates and plus the people who refinanced at the low rates, which goes back to multiple videos that we've done. And we've talked about how the majority of single-family property owners have an interest rate that is below 4%.
Look, 40% of all people own, 40% of all homes are free. So if you drive down the street in an average neighborhood and there's 10 houses in like a cul-de-sac, 4 of those are paid off. They're completely owned, free and clear with no mortgage. The other 6, 72% of them have a under 5% mortgage rate. And chances are they probably have about 50% of their loan is paid off, whatever it's worth. The loan's worth less than 50%. Like there's a lot of equity out there.
Right.
So there's people are not rushing to sell. Like nobody's rushing to sell. There's got more interesting data in here we're going to go through. Here's the next quote from the article. However, some promising trends are developing. The median existing home sales price was down 0.2% to $363 in February compared to a year ago. That's what we just talked about. That was the median sale price, according to NAR. This ends a record streak of 131 consecutive months year-over-year increases. Total existing home sales jumped 14.5% from January to February. Now this is nationally, ending a run of 12 consecutive months of declining sales, but we're still down 22% from a year ago per NAR. But that's still, we know that 22.6% is a fake number. First of all, it was more this month. It was 37%. But the 22.6% were people trying to capture whatever was left on the market.
Right. So last year was an outlier, and comparing this year to last year is not a fair comparison, and it's also not a helpful comparison.
Right. Okay, the next big bullet point in the article said, will the housing market crash? I'm sure they put this in there to get SEO value for someone putting in housing market crash and have their article come up. But here's what it says. Due in part to the ongoing inventory problem, and when they mean problem, they mean what, high inventory, record high inventory?
Record low inventory.
We were told what we were told a year ago that was going to happen to inventory a year ago.
We were told that inventory would hit record highs, the kind of which we had not seen since the great real estate crash, or maybe even more than that. We were told that prices would fall through the floor, and people should sell their homes because they could buy them for 50 cents on the dollar. Right now. A year later. And all kinds of predictions of that sort. We did not make any predictions of that sort. And I think that our estimation of what this year would be like is much closer to what's actually happening than the crash bros.
Okay, here we go. I'll read it. I'll start over. Due in part to the ongoing inventory problem, keeping home prices elevated, many economists predict the housing market's more likely to correct itself from the double-digit percentage jumps seen in home prices the past few years. When they say double digits, it's like 40%. Okay, from 2019. Home prices are up substantially from 2019. Home prices will be steady in most parts of the country, with a minor change in the national median home price, says Yun. He's the chief economist for NAR. However, some housing market watchers believe that homes in some areas could see sales and price growth. So we're talking about more homes sold and home prices going higher. Particular locations where home prices have remained affordable over the past few years in relation to median income. We're estimating about a 5% drop nationally, says Sharga. I don't know who that is. Some markets, believe it or not, will probably see prices continue to increase. 5% drop nationally is, it could happen, right? But we've already had some of that's already happened. So, if it's already dropped 3 or 4% in some areas, then maybe there's not much to go.
Well, and the other thing is, remember, these are national numbers. So you're going to see areas that maybe go up 10%, areas that go down. And so nationally, by the time you get to that, whatever that number is, that's how you get there. My take on it is actually much less exciting than that.
Okay.
I just see stability across the board. Yes, there's the possibility of recession in the fall, but the recession is going to coincide with lower interest rates, and that's going to support real estate values because more buyers will choose to purchase at that point. And it's going to also coincide with the fall when we tend to see a rise in inventory. So we'll see more transactions. So I'm less I see less drama on the horizon than maybe other people do.
Yeah. Okay, the next one. Will foreclosures increase in 2023? That was another thing we were told was going to happen. Massive millions of foreclosures. The homes had already been foreclosed and they were waiting to hit the market, which is like the most ridiculous thing ever. That would be like saying agents have taken millions of listings, but they haven't put them in the MLS yet. Like they're just sitting on these listing agreements. They've been sitting on them for months and they're all going to hit the market at the same time. Okay. Real estate agent takes it. They literally, as fast as their fingers can type, they put that thing on the market, right?
Right. So the idea that foreclosures are going to rise in 2023, that is a given, okay? That is a given. Now, it's a given because we're coming off of basically zero foreclosures. So if you had zero foreclosures last year and you have, 2 foreclosures this year, then it's a 200% increase. Oh my God, So, are we going to see more foreclosures? Yes, but are we going to see foreclosures that are that even approach the average of the historical averages? And the answer is probably not. There is a lot of equity, like Todd said. There's a lot of equity out there between the homes that are paid off and the homes that have a lot of equity. We're not going to see a whole lot of foreclosures. We will see more than we've seen only by virtue of the fact because that there were almost none.
Okay, so here's an actual quote from the article. Even with a steady rise in foreclosures that resulted after the expiration of the COVID-19 foreclosure moratorium, September 2021, foreclosures remain below pre-pandemic levels. Mm-hmm. In 2022, foreclosures were down 34% compared to 2019, according to Adams' year-end foreclosure market report. Here's the important thing. 2019 was the lowest foreclosure year of the previous 15 years. So you had 15 years. 2019 is the lowest in those years, and 2022 was 34% below that.
Right.
It's literally the least number of foreclosures we've ever seen.
But if you're comparing them, if you're comparing 2023 to 2022, it will be higher. So I want to make sure that I'm very clear on that before everybody jumps all over this in the comments. It will be higher, but that higher number is still going to be so low that it's not going to move the needle.
In a normal year, the default rate is about 1% of all homes. Right now, we're talking exactly right now, the number of people who are 30 days late is 0.67%. So it would take every single person who's 30 days late to go 60 days late, 90 days late, have a notice of default, then a notice of trustee sale, and then an actual foreclosure sale. And if 100% of those people, you would still have 30% less foreclosures than you have
normally.
Yeah. And we know that that doesn't happen. In Las Vegas, in the last 12 months, we had 533 foreclosures in a year. There were some days there weren't any foreclosures, and we were seeing that in 2 days in like 2008 and 9. Okay, there's foreclosures they're not going to happen.
Right.
Yeah, they're not going to happen. Okay. When should I buy a home in 2023? This was an interesting one I liked. As soon as I saw when, right? So let's talk about this one. This is big. This is an article. This is a quote from the article. Trying to predict what might happen this year is not the best home buying strategy. Buyers sitting on the sidelines today in anticipation of lower prices tomorrow may end up disappointed, says Nita Nawab, president of the U.S. region at Compass, a real estate tech company. Nawab expect home prices in the hotter markets during the past few years to decrease somewhat. So maybe, I don't know what that is, Boise or something, Austin. But she doesn't expect a widespread national price decline like what followed the 2008 financial crisis. Instead of waiting for much lower prices, experts suggest buying a home based on your budget and needs. If you find a home you love in an area you love and it fits your budget, the chances are it might be right for you. However, if you make too many sacrifices just to get a house, you may end up with buyer's remorse, potentially forcing you to offload the house. Okay, forcing to offload. Why would you be forced?
Like she said, if you're not getting the right house in the right place that fits your needs, then you're going to move on a lot sooner than you otherwise would have, right?
You don't buy the house.
Right. So don't buy the house. It's interesting because there are a lot of people, and I mean an unbelievable number of people out there who are sitting there and watching homes come on the market because they're looking. We did a video a couple months ago, and experts are telling us that was like 37 million people are interested in buying a home this year.
They were polled. 37 million people said they intended to purchase a home this year.
Right.
There's only going to be 4.5 million actual homes. First of all, there won't be 4.5 million because there's not going to be 4.5 million homes available to purchase.
Right. So the point of that is that if you find a house that checks enough of your boxes, I'm not saying you should go out and buy a house now, but what I'm saying is that if you are looking for a house already, so I'm not encouraging you if you're not already looking, and you find a home that checks enough of your boxes, that might make sense for you because it is that kind of a market where there are a lot more people looking than there are going to be homes available or that there are homes available now. So the idea that you will find that perfect house again when interest rates reach that Goldilocks moment for you is just not that likely.
There are still people who are probably renting that said, oh, I'm going to wait and buy when prices drop. And they were looking at this house in 2012 or 13 going, oh, I can't believe it's $130,000 for that house. It's probably going to drop again. I saw a video about the shadow inventory and home prices would fall. I'll wait till it drops again. Or, interest rates are 2%. I think they're going to go to 1%. So I'll just wait another year. It's like 2018 or 19 or something. So, right? I mean, the bottom line is you can wait all you want. We're not saying you should buy now. Certainly probably have more inventory in the fall.
Probably, but that doesn't mean that perfect house in that perfect neighborhood is going to be around in the fall.
Yeah. And people are buying, obviously in Vegas, 37% sales increase month over month. That's the biggest increase in, probably 3 years at least, right?
Right. And we still have multiple offers at all price points.
All price points.
All price points.
Okay.
That's what's really amazing.
So interesting article. Some new data that was in here that I liked. We're going to do another. I think we're getting close to another foreclosure update. Usually the foreclosure numbers lag by a month because it takes a while for everybody to I don't know who aggregates all this data, but they have to go grab every single county's data one at a time and put it into some model to then determine. It's like the election. They don't actually count all the votes. They just start guessing on how, if so many counties or whatever, then they can kind of tell how many foreclosures are, notice of faults and things. and everything. But so we're not going to have a lot of foreclosures. Interest rates probably not going to go up. If there's a recession, that's the best thing that could happen for housing, probably. All the people who are saying, but Todd, a recession, that'll do in the housing market. Oh my God, it would be the absolute best possible thing for the housing market.
Right.
The economy to start to tank, because what's the Fed? Every 4 or 5 of the last 6 times, the economy tanked. Home prices went up.
Right.
Because buyers came back, because interest rates dropped.
Right, because the Fed is trying to stimulate the economy to keep everybody employed.
Right, and you're not forced to sell,
No.
because if you bought a house and you have a $1,200 a month payment and you lose your job, you are not forced to sell so you can go rent a house for $2,400 a month. You would probably say, I'm just going to keep my house payment. I'll just get another job.
Absolutely. So look, there are choices out there for everybody. We're not saying to go out and buy a house.
No.
We are saying that, as always.
You missed it. You should have listened to us in the past.
We are saying that if you find the perfect house and it makes sense for you, go for it. If you want to wait, that's perfect too. Everybody's situation is different, so do what fits best for you. Was this interesting? Did you learn something? Did we entertain you? Did we make you laugh? If any of those, please like the video, please subscribe, hit the notification bell, share the video. Leave us a note and tell us what's happening in your market. We always want to know. And we'll see you on the next video. Bye.
Bye.